Most people think value comes from profit, cash flow, or authority. But some of the most valuable things in human history had none of those. Indeed, they had no company, no CEO, no income, no physical form. And yet, people trusted them, used them, and built entire systems around them. This is Unblocked Money, the series where we decode the new financial world with clarity and precision. Bitcoin sits at the center of a paradox. It has no headquarters, no balance sheet, no dividends, no central authority. And yet it became one of the most valuable assets ever created. At the same time, its price moves like a storm. Violent rises, sharp crashes, long calm periods that suddenly explode into chaos. This contradiction confuses people. How can something be valuable and unstable at the same time? To understand this, you need to step back. Far before crypto, far before banks, far before modern markets. And you need to understand what money really is. Every form of money humanity has ever used, cowrie shells, salt, gold coins, paper notes, gained value the same way. People accepted it. People trusted it. People agreed it meant something. Money is not backed by objects. Money is backed by belief, coordination, and scarcity. Gold wasn't valuable because it was shiny. It was valuable because it was scarce, durable, and widely accepted. Paper money replaced gold, not because it was stronger, but because people trusted the system behind it. Even today, fiat money works, only as long as trust holds. Bitcoin follows the same logic, but with a fundamental difference. Its trust is not social or political, it is mathematical. Bitcoin's value doesn't come from promises, it comes from rules. Rules that anyone can verify and rules that no one can change. This is where Bitcoin becomes unique. For the first time in history, an asset combines properties that never coexisted before. Its supply is fixed, 21 million, no more ever. Its ownership cannot be censored, no one can freeze it, no one can confiscate it remotely. It is borderless. It works the same way in Paris, Lagos, Mumbai, or Buenos Aires. It allows direct self-custody. You can hold wealth without banks, intermediaries, or permission. And every rule is transparent. Every transaction is verifiable. Nothing is hidden. No other asset in history has combined scarcity, security, portability, independence, and global verification at the same time. And this is what gives Bitcoin value. But if this foundation is so strong, why does the price behave like a roller coaster? Well, because Bitcoin is not just an asset, it is a system still discovering its price. Think about the early internet for a moment. Companies like Amazon surged, collapsed, and surged again. Not because they were broken, but because the world didn't yet know what the internet was worth. Bitcoin is going through the exact same process, except that it's globally, in real time, with no pause button. And you add on top of that a new technology, a new monetary system, 24-hour global trading, plus media cycles, fear, hype, institutional moves, and government reactions. And what you get is price discovery under extreme conditions. In other words, Bitcoin is volatile because it is young, borderless, and constantly repriced by the entire world. But there's something deeper. Bitcoin's volatility is not a flaw. It's part of its growth mechanism. Volatility attracts attention. Attention brings liquidity. Liquidity brings users. Users strengthen the network. Stronger networks attract more trust, and trust reinforces value. Bitcoin grows because it moves. And as the network matures, its volatility gradually decreases. Early systems swing wildly while mature systems stabilize. It's well known. Bitcoin is following that path, slowly, visibly, and predictably. But volatility isn't only economic, it's psychological. Humans react emotionally to money. Fear accelerates sell-offs. Greed accelerates rallies. Narratives amplify everything. Bitcoin operates globally 24 hours a day across cultures, time zones, and political systems. And every emotion, every rumor, every headline hits the price instantly. Short-term chaos is inevitable, but beneath it, long-term pattern continues to form. Yes, as Bitcoin grows, its holder base strengthens, liquidity deepens, cycles smooth out, and volatility shrinks, not because Bitcoin weakens, but because it matures. Now, very quickly, before we continue, if this breakdown is giving you real clarity, take 1 second to like this video. It helps the channel grow and lets me keep producing content at this level. So what does all of this mean for you? It means Bitcoin is not chaos money. It is price discovery in real time. It means volatility is not randomness, it is a signal, a reflection of adoption, a symptom of growth. And most importantly, Bitcoin's value does not depend on decisions made behind closed doors. No. When every other form of money depends on political choices, Bitcoin depends on mathematics. Its scarcity is coded, its rules are public, and its monetary policy is known in advance. That is why people trust it. That is why institutions adopt it. That is why it survives every cycle. Bitcoin does not promise stability, it promises certainty. And over time, certainty creates value. If this episode brought you clarity, subscribe and tell me, do you think Bitcoin's volatility is a weakness or the engine of its growth? The next episode will cover the Internet of Value and how crypto rewires the financial system.